Welcome to Investing Insights with Ben. I'm your host, Ben, 13 years in the market and nearly 5 years trading full-time. My edge comes from cycles, spotting when the stocks, commodities, and crypto are primed for big moves. I combine technical analysis, order book flows, and even Astro cycle studies to time entries and exits with precision. The goal? Consistent 5 to 10% portfolio gains per month, the kind of returns that beat the broader market and even hedge funds. If you want timely strategies you can apply right now, hit like, subscribe, and tap the bell so you never miss the next setup. Hey, welcome guys to Investing Insights with Ben. This is your host Ben. Very excited to share some information with you today about the direction of stock market and crypto market. As you can see on my screen, I have the SPX, which is the cash settled ETF for S&P 500, representing our market. Today is the 16th of September. As you can see, I have an arrow pointing down at about this point. I had it on the 15th, which is assuming that somewhere around the 15th, there is going to be a top, and then we can either go sideways or down until towards the end of this month. I have the arrow on the 25th, but it's not certain that these dates exactly work like that. It could be a day or two or a couple of days off. The idea is that in this time frame, we're going to look for a move either sideways or down. And during that time period, if you have any stocks that you want to buy, you can buy those stocks. Hopefully it'll be a decent dip and we can buy some stocks, because the next move up after the end of September, I'm expecting is going to be a huge move. So, and Bitcoin has the same similar dates as well, 15th of September, 16th of September to about 25th, 24th, about the same time frame. It's not necessarily those exact dates. But sometimes it can go up more. Who knows? It can go up to 6,800. I don't think it's going to do that, but we don't care how far up or down it goes. It's the time frame that you have to look at, and then you trade based off of that. So how do you trade? I have my personal indicator that I use that helps me enter and exit positions, but it is very similar to the Stochastic RSI indicator that is available on the free indicators on TradingView. As you can see, this is the regular RSI, and this is on the daily time frame. You can see it is pretty stretched. It's close to 70, and it's turning back down now. It's in the middle of the day, so don't count on where it's going to end up being. But for now, it's going down, and basically it's an overbought condition right now. The market is, and it needs to breathe a little before it goes up, which kind of is similar to what our timing. These are the cycles that I use. I've done extensive studies on cycles, and I still do. I'm a student, and that's what the cycles are calling for. Number one, you look at the RSI. Number two, if you don't have the indicator, you can use the Stochastic RSI indicator, which basically tells you the momentum of the market. So the blue line is the momentum line, and then crosses the orange line from up to down. That means the momentum is to the downside, and if it goes up, like in this case, it shows you that the market is trying to go up. What you do is you can use it at different time frames, right? So the daily and 4 hours. I use 4 hours, 8 hours daily. And if you want to invest long term, then you look at the weekly. So if you click on the weekly, you see previous occasions like this one right here. It shows you from March 17th to April 7th that it's trying to go up, but it separates on April 7th. Now what you can do is you can go to the daily time frame, and then you go, what's happening here? Okay, right here, it's trying to go, it's moving up. So either you can see, okay, it's coming to the orange line, so I'm going to enter, or you can wait until after. So you would have entered like somewhere here, and you're going to bought the dip again, because it still keeps going up, right? And then at that point, you're like, okay, now it's turning back down. What do I do? It's April 16th, so you go back to the weekly. You're like, April 16th falls somewhere here, and then you like, weekly shows that its momentum still up. So I'm going to stick here, I'm going to stay here. So if you're a longer term investor, then you could have entered somewhere in this week, and then you've gone all the way up. You see it's actually it's separating on July 28th. So you would have captured all this move. You can do that on daily time frame, you capture smaller moves. You do weekly time frame, you capture bigger moves. And sometimes you're going to get whipped out as well. Like you would enter here again, thinking it's going to go up. If you don't know the cycles, right, you're going to get whipsawed. But if you know the cycles, you're like, okay, well, I'm close to the top. I'm not going to enter on a longer time frame. On a shorter time frame, yeah, we can enter this week, or we can exit this week, and then we can enter again next week. For that, you won't use the weekly. You would use the daily time frame. or the 4-hour and 8-hour time frame. So that's what we're expecting, that the market can correct a little. It's not going to be a huge move. I'm not expecting a huge move. Anything under 5% maybe. Maybe it's bigger. It doesn't matter. What matters is when the timing shows you to get out, you get out. And when timing and the RSI shows you to get back in, you get back in. You capture that whole move down or whole move up. This is going to be, if it is a decent sized move down, good, huge buying opportunity expecting, because the next move up is going to be crazy. Why do I think it's going to be a crazy move? It's because number one, rate cuts are coming. Market has expected that there's going to be rate cuts. There's a 100% chance of 25 basis points rate cut this week. And then there's I think it's like 70+%, or I don't quote me on that, but there's a huge chance on 50 basis points as well. But then JP Morgan just came out yesterday saying that the rate cuts are going to be, it's going to crash the market. If you look at the history, if the rate cuts happen during a recession, that actually crashes the market. But if it happens outside of recession, which is the case in this time frame, it actually helps the stocks. So the stock market goes up, shoots up. And it's really good for crypto. It's really good for growth stocks, tech stocks. They go crazy. Altcoins are going to go crazy. There's nothing negative going on right now. There's no new huge news. There's no new wars coming out. There's no, if you look at the yields, the 10-year yield, it's going down. If you look at the 2-year yield, short-term, long-term yields, they're coming down. The rates are coming down, which is good for the market. People get money at cheaper rates. Interest rates are coming down. People get money at cheaper rates. Oil is down. It's coming down. It's been like 2-3 years. Oil's been on a decline. And 2-3 years that when the rates go up like this, that's when it scares the market. But when it's coming down, it doesn't scare the market. It actually benefits the stock market and crypto market. If you look at the M2 money supply, the money supply has gone up substantially in the last few months. And crypto and growth stocks, they benefit from money supply, but there's about 13-14 weeks period that once you start seeing the spike in money supply, it actually affects the altcoins, the stock market, crypto market, a few weeks after that. All the conditions are primed for stock market and crypto market to go up. We're just anticipating that because of the volatility that's going to come from the rate cuts, there's going to be a huge buying opportunity if there's a dip that comes the end of September. There's some trades that I'm looking at, few trades, but they actually went up quite a bit already, so I'm not gonna tell you those trades. Again, I'm not a financial advisor. There's other trades that I'm taking myself. I've done investing for 13-14 years now, and I've been a full-time trader since 2011. What I understand, my prediction for the market is that we're gonna see some spike now, good upside for a few months towards the end of this year, maybe early next year, and then after that we're gonna see a crash in 2026, and that'll be a great buying opportunity. So there's gonna be a multi-month crash in 2026, and then maybe third quarter see some great buying opportunities. Huge buying opportunities. These are for investors, long-term spot investors. Anybody who wants to make money for a few months, this is a prime opportunity. People like Warren Buffett and all knew how 2025 was going to be, and they've entered some new positions because they know there's going to be some upside to the market now, but they're going to exit again, and they have a smaller portfolio. They're saving a lot of cash because of what is coming next year. This year has been choppy, and the next year is going to be very scary, beginning of 2026. But that's when they're going to start deploying. You'll hear a lot of big investors putting back money in stock market. But we'll keep you updated as we get closer to those dates and months. But for now, it's supposed to go up. This is how I trade. There's multiple ways of trading. People make a lot of money using different TA or indicators. I use a combination of a lot of things. I make my predictions based off of cycles. I look at Astro. I'm a student. I work with a lot of coaches that we understand what is going on in the Astro world, what is going on in cycles. These are mathematical cycles. I look at TA and I look at indicators. And for crypto, I also look at the order book to see where big money is putting their money in, to see maybe we can find some time frame and target buying and selling prices. But these are main points. Some of the trades that I'm looking at is some names like Dollar Tree. I think Dollar Tree has a potential from now till, this is November 14th. So from now to November 14th, that's a bigger time frame. You can use like a weekly stochastic RSI to see when it actually starts turning up and it's crossing orange line. a good opportunity to buy. Or you can use the daily. Daily is going to whipsaw you a lot. That's why. So this, if you knew that this is where you were going to buy after this date, you would actually you wouldn't have entered anywhere here. But now, let's say it comes down and then it goes back up and you enter and then it does it again, it goes back down. You can exit right away. I mean, there's 1%, 2% loss. Take it, leave, get out, and then enter back again. Or you can just wait for, you can do 3-day to see if the 3-day works better for you. If you have entered here, look, there's good upside. If you enter here, it shows that it can cross any day now. So if it crosses, that might be a good one. So figure out which one you like, figure out on each name which one works. Does the weekly work better? Does the 1-day or 3-day? So look at the name, the ticker, and then figure out which one you like. Another one I have on my watch list is HDFC. This one also we actually have a position on. And this one, again, we're looking at September 19th through like October 16th. Any day now it can start moving up. If you see like on a daily time frame, this is where we probably entered. I don't remember exactly. But like when the cross happened. So again, I don't use the Stochastic RSI myself. I have an indicator. It's a custom indicator we built it using AI, which is a little more refined version of Stochastic RSI. So sometimes it whipsaws you. Our indicators don't. But you can use, again, this is probably where our indicator gave us the go. And then you can see like it's going up. And now it's about time that it could start maybe moving down. And if the stock doesn't go up straight away like that, then what it does is it's going to come back down and then it'll stop here and then go back up or come back down again and oversold. And then it's going to flip back up again. And then that might be a better opportunity if it does that. But anyways, I'm just giving you time frames and you can use your own indicators or you can use the Stochastic RSI indicator to figure out. Again, you can use different time frames and it'll give you the signal to go back up. And if Ben is wrong and it doesn't go up, use the same indicator. When it starts going back down, just get out of the market. You don't need to do that. What it basically does is we capture gains like we'll do 4%, 6%, 10%, 15, 20, 40% gains on stocks, 40%. All these gains are using the same indicator. I don't use stop losses because I don't need to. If I set my stop loss, I would have to set it below this liquidity right here, right? So about 34.51. But if I'm using my indicator sometimes will tell me, hey, it's about to go down. Even when I'm in gains, it'll tell me it's about to go down. It's not looking good. It's losing momentum. So you get out there. And so we never have big losses. Sometimes you have to leave limit stop loss at about 5%, 10%. 10% is probably on the higher side, but you don't need to do that. Just use, this is what I do. I'm not suggesting you anything, but I'm just telling you what I do. So which helps me gain anywhere from 5, 10% on my whole portfolio per month. Yeah, we did about a little over 10% last month. I had ENPH, the ENPH energy on my stock that I wanted to share in this video. I made a video this morning and it didn't work out, so I'm recording it again. That stock already went up 3-4% today. So not something that I would enter at this point. But there's some good ones. I'm looking at my other screen to find any of the good ones. CME is a good one. Yeah, so CME, it looks like it's picking back up again. Yeah, so on the daily time frame, you see it's picking up momentum now. So that might be a good place to enter. So right here is where you got the signal. So if you entered here, so right now it's actually a good spot to enter. I'm expecting it to go up from here on, and there's a possibility maybe somewhere October first week. Yeah, somewhere around here. So what this basically means is you're going to see momentum. I don't know if this move is going to be 5%, 10%, 20%, but when the RSI tells you, Stochastic RSI tells you to get out, you get out. And use daily, use weekly. If the weekly is telling you it's time to enter, that's perfect timing to get in. And then when you get out is when the daily tells you to get out, maybe get out. Or use combination, it's every stock is different. It flip-flops, price movements are wild in some and it's smooth in others. So it's not a one-size-fit-all. You have to figure out which time frame you want to use to enter and exit. My videos are going to be very timely. I'll give you indications on what is happening today, this week, next week, like I said, market expecting going towards the end of this month is when, it doesn't mean it's going to go down straight into that. I'm just saying from here to here, there could be a move down. It could start today, it could start tomorrow, Friday, and it doesn't have to go up on 25th. It could start going up on Tuesday, Monday, or the week after. It's just this time period is not good for stocks to go up, is what I'm saying. There could be some downside or sideways chop. Thank you. Cheers. That wraps up this episode of Investing Insights with Ben. Remember, timing is everything. Edge comes from discipline, not luck. Like, subscribe, and hit the bell so you never miss the setup that can move your portfolio.